Hey, what's up everybody? My name is Zach Pasquarello. I own a bookkeeping business. I am also a real estate investor myself, and I do bookkeeping for a ton of real estate investors. In this video, my whole goal is to give you some essential tips on how to do bookkeeping as a real estate investor, specifically using QuickBooks Online. If you're not already using QuickBooks Online, I definitely recommend look into using it. If you can see on the screen here, it only costs $15 per month for QuickBooks Simple Start. Keep in mind that is just a 3-month promotion, but you get 50% off for the first 3 months. So at the very worst, you could at least try QuickBooks Online for 3 months, spend $45 and decide if you want to keep it or not. After that, it will be $30 per month, which is really not that much in the grand scheme of things to have updated and accurate financial reports. If you only have one rental property, you probably don't need QuickBooks. But as soon as you have multiple rental properties, I definitely recommend invest in QuickBooks Online. It will help managing your bookkeeping and finances so much better, and also it'll make taxes much easier. So in this video, I'm going to give you some tips and tricks on how to do your bookkeeping as a real estate investor. First of all, I'm going to show you real quick what you should do whenever you're purchasing a property. So that's probably where the majority of real estate investors start, purchasing a property. So it only makes sense we will start there as well. So you're going to need to do a journal entry, and this does get kind of complicated. So you might want to hire a bookkeeper or maybe ask your CPA to do just the journal entry whenever you purchase the property. That might not be a bad idea, or you can watch this video and maybe you can figure it out yourself. So the very first thing that's going to happen is you're going to pay an earnest money deposit. So I generally recommend that you create a current asset account. So we'll just call it an other current asset account. And then we can call this earnest money deposit. I usually like to say EMD for short. That's usually what I search for, EMD. That's what everybody calls it. So this is an asset account. So in this example, let's just say your EMD deposit to purchase a property was $2,000. So you are going to write a check to your title company for $2,000. So in this example, we're going to credit the checking account for $2,000 and debit earnest money deposit for $2,000. I see a lot of times people treating this $2,000 expense as an expense on the profit and loss. That's not the case. This is only an earnest money deposit, and we're going to reconcile this asset account whenever we actually purchase the property. So here's what it looks like. So 2 weeks go by, and now it's time to actually buy the property. Now this is the journal entry. That's a lot more complicated. So obviously you're purchasing a property, so that's going to be an asset. So we're going to add new, add a fixed asset, call it a building, and you can, whatever you want to name it, 1 Main Street. I usually name it whatever the address of the property is. Now let's say we purchased 1 Main Street for $100,000. Let's keep it simple. Now every time there's a closing, usually there's some taxes that are paid up front. You don't need to capitalize property taxes, so we can write those off as an expense. So we're going to create a new expense category. Doesn't really matter what you call it. We will call this property taxes. And I get all of this information straight from the HUD. So whenever you close on the property, all of this information should be available from your title company. It should be directly on the HUD. So you don't need to make up these numbers, just whatever the numbers are on the HUD. We'll just say $1,200 for property taxes just to keep it simple. And chances are there's a loan, even if it's a quote unquote cash transaction and you still have a private money lender, you still want to record a liability. Or maybe you use the traditional bank and you got an actual bank. So in this example, we are just going to simply call this 1 Main Street loan. Pretty straightforward, 1 Main Street loan. We'll say maybe it was for, maybe you got a $95,000 loan. I don't know, I'm just making up numbers at this point. So now we purchased the property. The purchase price was $100,000. We had $1,200 of property taxes, and then we had a $95,000 loan. Now don't forget, we already paid $2,000. So here's where we're going to reconcile that earnest money deposit. So here we're going to credit the EMD account for $2,000. Now, if you remember, previously we debited the EMD account for $2,000. So this is going to cancel the earnest money deposit account. We don't want to have money left over in here after closing. 2,000 go in, 2,000 go out. It's a wash. That's pretty straightforward. Okay, so now we have $4,000 left over. Where does that money come from? Everybody already knows this is cash from the borrower. So now we have to write a check or send a wire for the remaining $4,200. Once again, so this is why it's a little bit confusing. This is the only cash transaction. We just see $4,000 leaving the checking account. So it's kind of hard to figure out like where do these other numbers come from? That's why you need to just look at the HUD. It's very straightforward. Keep it simple. Don't overcomplicate things. Just write down all of the numbers from the HUD. And once again, if you do need help with this, feel free to reach out to your CPA or your bookkeeper. They should be able to help you. So once you purchased your property, I strongly recommend go to the bank transactions here. And this is where you're going to connect your bank account. So in the top right-hand corner, all you need to do is click link account and then whoever you're using, whether it's Citibank or Chase or Wells Fargo or Capital One, it doesn't matter. Even if it's a local credit union, you can still connect your bank to your QuickBooks account. And that way, as you can see here, all of your transactions get automatically pulled into the bank feed. Now, keep in mind, just because you see the transactions here does not mean that these transactions have been recorded. So think of this as like a limbo where yes, you see the transactions in QuickBooks, but they haven't been recorded. So these transactions are not going to show up on your balance sheet or on your profit and loss. So you're not done yet. Just because you connect your bank account doesn't mean you're done. You still need to go in here and categorize your individual transactions. So I'm not going to spend time here because every property and every business and every person has completely different books, but you're going to have things like utilities, insurance, contractors, supplies and materials. Maybe you're receiving money, maybe it's rental income, or maybe you're receiving cash because you just sold a property and made a profit. Whatever that might look like, categorize your transactions appropriately. The one thing I will recommend, always make sure you write down a vendor anytime you pay somebody. I don't care if it's a utility company or Home Depot or John Smith, the general contractor. Always make sure you add a vendor to every single transaction. And this becomes really important whenever it's time to send 1099s. So it's February right now, which hopefully means that you all have already sent out your 1099s for 2023. So you can actually use QuickBooks Online to generate and electronically file your 1099s to the IRS and to your vendors and contractors. The most important thing is that whenever you're creating a new vendor, make sure you check this box right here that says track payments for 1099, get their W-9, enter in their social security number, enter in their address, and enter in either their first name, last name, or the name of their company. If you have multiple properties, it might make sense for you to track each property individually. And that can be done pretty easily. Click on the gear icon here in the top right-hand corner, go to Account and Settings. And then on the left-hand side here, click Advanced. And then here under Categories, you see Track Classes. Just check that box and then click Save. And then click Done. And then now you have the ability to allocate individual transactions to an individual, what we call class, quote unquote class in QuickBooks. And that gives us the ability to generate reports specifically for each individual class. So every transaction needs to have a class. And this is useful for generating a profit and loss per property, because every real estate investor wants to know, was my individual property profitable? It's one thing to know, was my whole business profitable? But once you get multiple properties, you want to know, are my individual properties profitable? And in order to track that, there's one extra step you need to do. Whenever you're categorizing transactions, now, not only do you need to allocate the vendor and the category, now you also need to allocate the appropriate class, which I usually just name the class the same as the property address. So 1 Main Street, 10 Pennsylvania Avenue, 5 Circle Drive, whatever the name of the property is, that's how I do it with the class. And then you can go to reports, and then you can see here, you can actually run a profit and loss by class. And so for utilities, job supplies, insurance, interest paid, and contractor labor, it's always good to give those property specific transactions a specific class so that you can look at your profit and loss by class, which means you can tell the profitability of each individual property. Okay, one of the last things I want to talk about are your financial reports. So obviously, pretty much everybody knows about the profit and loss. This is pretty straightforward. You're going to have income up top here, and then you're going to have expenses down below, and then you're going to have your net income. That's really honestly pretty straightforward. The one report that most people don't look at, and they should, is the balance sheet. The balance sheet is going to have all of your assets and your liabilities. So assets, cash, bank accounts, checking accounts, savings accounts, accounts receivable. Real estate investors don't really have accounts receivable. And then this earnest money deposit, like I was talking about, this should usually be 0 unless you're in the process of closing on a property. And then we have our assets, our fixed assets. And this is going to be all of your properties. And then so whenever we add together the value of your properties and the cash that you have, that will be your total assets. And then we have liabilities, things like accounts payable. So if you have a contractor working for you, maybe you pay them every 15 days. So they just gave you a bill today. I'll talk about this real quick. If you are tracking your accounts payable in QuickBooks, you just need to click on the plus new button up here in the top left-hand corner, create a bill. And then you just need to identify who did you pay, what's the category, most likely it's contractor labor or maybe utilities or maybe insurance. So who did you pay, what's the date, what's the category, you can write a brief description, it doesn't matter, and then the amount. And then also the class. If it's for a specific property, don't forget the class. And then down here, you can add whatever attachments you might want to add. And then once you've created the bill, that creates an accounts payable. So that does not mean that you've paid the bill. You've created an accounts payable. That means it's something that will be paid in the future. And then you can write them a check, or you can pay them with a credit card, or you can pay them with ACH direct deposit. It doesn't matter how you pay them. You just want to make sure you're tracking all of this stuff correctly in QuickBooks. So you click the plus new button, and once you've paid them, you can actually use QuickBooks to print checks. But if you're not using QuickBooks to print checks, you want to tell QuickBooks, hey, this bill has been paid. It's no longer open. So select the payment account. Maybe we use the checking account. Maybe we pay them with a credit card. It doesn't matter. Whatever the date is, and then you just select the bills. Like, hey, I already paid these 3 bills. I gave these guys a check today. And then you click save. And now these accounts payable have been closed and they've been paid out. Accounts payable management in QuickBooks does get kind of complicated. If you are using QuickBooks to track your accounts payable, I definitely recommend click on reports, and then up here in the search bar, you can search for accounts payable, and then you definitely want to run an accounts payable aging detail report. And you should look here to see, do I have any outstanding overdue bills that have not been paid, or maybe they have been paid, but they're just not marked in QuickBooks as being paid. You definitely want to make sure you keep that organized and keep that updated and accurate. Okay, last thing I'm going to talk about, and then I'll let you go, the balance sheet. So we already talked about assets, liabilities. We have accounts payable, credit card accounts are a liability, and long-term liabilities, notes payable. These are most likely going to be mortgages on your property, whether it's through a traditional bank or through a private money lender. It doesn't matter. You still want to record your liabilities. Now, finally, we have equity. So just so you understand the balance sheet, it is assets equals liabilities minus equity. So whatever, if your assets are greater than your liabilities, then you're going to have some equity in your business, which is a good thing. You want to have equity in your business. You want your assets to be greater than your liabilities. If your liabilities are greater than your assets, that's a bad thing. That means that you are probably in a lot of debt and you don't have enough cash or enough value in your properties to pay off all of your debt. This happens a lot of time if you buy a property and you spend a lot of money to fix it up, and maybe you rack up a credit card bill, or maybe you pay a lot of points on your private money loans, and maybe you haven't flipped your property yet. Hopefully, when you do flip the property, you're able to get cash back, and then your assets will be greater than your liabilities. So you definitely want to keep tabs on not only your profit and loss, but also your balance sheet. Look at your assets and your liabilities. And if there's ever anything in your balance sheet that doesn't make sense, that should be a red flag. And you want to look into it and figure out what it's doing on your balance sheet. For example, if you have uncategorized assets or undeposited funds or random loans that you've never seen before, look into it, ask your bookkeeper, ask your office manager, ask your executive assistant, figure out why it's on your balance sheet and figure out maybe if it's not supposed to be there. That's it for the video. Just a brief introduction to QuickBooks Online. Hopefully some helpful tips if you're a real estate investor. If you have any questions, my information is in the bottom of the video. Feel free to reach out anytime.